Okay, we are now ready to start the lecture example that I typically will go through in class. This is the Tailor Salon service. These are may be provided for you in your Blackboard, but if not, I will try to make these available through a different method. If not, in the YouTube video, in a link, you can always email me, and I'll definitely get you a copy so you don't have to keep switching back and forth or writing these down. If you wanted to pause it and go ahead and write some of these down, you can. It may help if you don't have this. Before we do any accounting work on any transactions, you always want to have the two things out. You want to have journal paper out, and you want to have a T account paper out. Now, I'm going to be doing both of them right here in Excel, and that's fine for you if you want to do that as well. If you are a much faster typer than you are a writer, simply feel free to do it in Excel. But a lot of beginning students do like to do it on paper first, with journal paper and a printed out, possibly T account sheet. Okay, so I'm going to keep referring back to this page. I have it as one of my tabs down here. And then we're going to go right into and see how these accounts are going to affect the T accounts, which accounts are going to be affected, and then also show how to do the journal entry for our first example. Okay, so we remember back to our past video, we always ask ourselves two questions to know which accounts we're going to use. The first question is, what did the business get? Well, in this case here, the owner put money into the business. So when we ask the question, what did the business get, that's our debit question. Hopefully we can see that the business got money. And for accounting terminology, money is cash. So what's going to happen here is I'm going to debit my cash. So my very first transaction here, under the assets, I'm going to increase, because it's on the plus side, that's the normal balance. I'm going to increase my cash by $30,000 because that's what the business got. And then I ask, how did the business get the cash, or where did it come from? And hopefully you can think about, well, it probably came from the owner because the owner invested it. And that falls under one of our parent accounts called owner's equity. And as hopefully you can see here, the owner's equity, the $30,000 is on the credit side. And the credit side is where the plus side is. Minus is on the debit, and the plus side here. I'm going to move this over so it's maybe a little bit easier to see. So we do have a debit, we have a credit, and then a couple things I want to check. Does it make sense that my cash would go up by a positive amount of money? And it should, yes, that should make sense. It would not make sense that my cash would go down by $30,000 when I don't even have any money to begin with. Same over here. It doesn't make sense that the owner invested a negative amount of money into the business. So that would be a positive $30,000. So we look at the equation, $30,000 over here on the plus side with plus $30,000 equals, well, nothing here so far, plus $30,000 here, we do balance. Now let's look at a journal entry. Now that we have the two accounts that are used, the debit and the credit, we can now pull up our first journal entry. And this is an example of what a journal will look like. On the left-hand side, you're always going to see the date column. And for this one, just to make it easy, I just put it as transaction number 1. And then in the middle, there's usually some, if you're looking at actual journal paper, there's some big open spaces, and this is where we're going to put the accounts that are used. We always put our debit first, which in this case was cash. Put that underneath the debit column, off and to the side. And then we always put our credit second. And we also always indent them, just like how you would indent a paragraph. Since we only had two accounts, it's pretty easy to see that these equal. All right, let's look at transaction number 2. The owner, Taylor, also invested a barber chair that he bought 5 years ago, and it was valued at $6,000. Okay, so we got to ask ourselves the two questions. The debit question, what did the business get? Well, if I read through this here, the business got a barber chair. Now I want to think, should that barber chair be an expense? Or is that something I own as an asset? And we can do the check. Remember to be an expense, we've got to meet two criteria. Are we going to be using the barber chair now? Yeah, we're going to need to be using that to cut hair. Are we going to be using the barber chair for less than a year? And the answer is no. That's something we're going to use for a long time. So that's going to be an asset, something that I own, and I'm going to have for quite some time. So I'm going to pull up my T account again. Under the assets, so I've already got the cash. Now I've added a chair account. And more specifically, I'm going to call this equipment-chair. I'm going to say that it's a long-term asset by indicating it's an equipment. And then I'm going to tell exactly what that piece of equipment is. Because most likely I'm going to have more than one type of equipment later on. Okay, so does it make sense that my chair was a positive amount? That I have a positive amount of worth in the chair? That makes sense. And then second, I need to think, how did I get the chair? And it tells us in the problem that the owner invested it. So just like with cash, the owner can invest other items as well. So here we have another investment of $6,000. And it makes sense that the owner's equity would go up by $6,000. Now we're going to look at that from the journal entry standpoint. A couple things to note as you're doing journal entries. Always leave a space or two in between. Journals are supposed to be very easy to read, and you don't want to have everything crammed together. That makes it very tough to read. So for my journal entry number 2, the debit was equipment, remember? And I'm going to spell this out a little bit more, equipment-chair. And then we note how the business got it, which was through an owner's equity, which was an owner investment, which is called capital. I put in parentheses common stock because, remember, they are synonymous in terms. Wiley Plus will a lot of times use common stock. Or I like, in this type of where it's a sole proprietor, it's kind of more advantageous to use capital. And then, of course, my debits and credits here do equal the $6,000 amount. Number 3, Taylor paid $900 for advertising. Okay, so we asked, what did the business get? Well, we got the use of advertising. That's a benefit that the business gets. And now we got to ask, well, is this advertising for right now? Unless it says otherwise, we'll assume yes. And is this advertising going to last me more than a year? No, it's not. It only lasts you during that month that it maybe ran in a magazine or on a radio commercial. So it's going to last you definitely a month or less, most likely. But definitely less than a year. So that $900, what did I get? I got advertising. So I can go here to my journal entry number 3 and look over, and I got advertising expense. My advertising expense did go up. I spent money for $900. I wouldn't necessarily have to spend, but what this is saying is I got the benefit. I got the benefit of $900 value. But I actually did spend the money. So we ask ourselves, what did I have to do to get this advertising? I had to write a check and pay cash. So for transaction number 3, I had a debit to my expenses and a credit to my cash account because I actually paid money. Now, one thing where some people may get antsy here and think, uh-oh, there's something wrong, because look on this side of the equation, I have a minus. I minused my cash, therefore I had to subtract my assets. Whereas on this side, my expenses were actually increased. So how could you have a minus over here while having a plus on the expenses? And the one key rule is the minus sign in the equation. It overrules. So just think of like multiplication. If you have -8 times +1, the negative overrules and your answer is -8. Same here. If I have a -900 over here, well, this is, yes, a positive, but this negative shows it as a subtraction. So a -900 does equal a -900 over here. We now go on to our journal entry. We're going to show a debit to our advertising expense. Debits are always, remember, up against the edge. And we're going to credit our cash because we spent the money. At any time, make sure you pause these videos. I know I go through these kind of quickly because everybody's at a different speed and I don't want some to think it's really slow. So pause it and take as much time as you need to understand each one. The fourth one, Taylor purchases some supplies. Keyword here is some supplies. Small things that don't necessarily last forever. And we bought them on account from Miller for $1,200. So we asked, what did the business get? Hopefully it's becoming a little easier now. We can say that the business got supplies. So I'm going to look to I'm going to pull this over and look at my T account and think about where are my supplies. Well, supplies are generally something that I own. But then I think, well, could it be an expense? So I think, am I using the supplies right now, this month? Maybe, but maybe not. So if I don't know, I've got to go ahead and put them in the assets. And note here on my T account sheet, I usually don't have enough room for all the assets because we're going to keep adding some in here. So on my T account sheet, I have this little line that kind of cuts over. So everything over here is still part of the assets. So here's my supplies account. Remember on the original T account sheet it said inventory or supplies. Well, right now we're using supplies, so that's what we'll call it. Remember these are plus minus, so we got the plus and I just wanted to say plus and minus. So our supplies did go up by $1,200. That makes sense. And then I think, how did I get the supplies? It says I bought it on account. Therefore, I didn't pay for it. Not yet. I'm going to pay somebody in the future. So I'm going to be paying them or payable coming up. So that's considered a liability for my credit. Notice here I put accounts payable and then I put who it is, who it's to, because I always want to know who I owe money to. So account payable dash Miller. And does it make sense that I owe Miller a positive amount of money? And that should make sense that yes, that does work. Now I move on to the journal entry. I show that I got my supplies as my debit. Notice it's just supplies, it's not a supply expense, not yet. We'll get into that in a week or so, how that works, where that comes into play. And then I also show here that I owe money to the Miller account. Okay, we're about halfway done. Looking at the first one here of December 5th. Taylor pays the electric bill of $100. I asked myself, what did the business get? The business got the use of electricity. Did the electricity get used right now, this month? Yep. Am I going to use that same electricity for more than a year? No, that doesn't make sense. So that's going to be an expense, a utility expense. So my entry for number 5, I'm going to scroll all the way over to the expenses and show that I debited my expenses. My expenses did go up a positive amount here. And then I think, and I ask the question, how did I get the utilities? What did I have to do? Did I just go into the store and smile and they gave me utilities? Not likely. I paid money. It told me in the problem that I paid for the utility. So when I pay for something, I need to take it out of my cash. Just like what I did here with the 900, same thing. Now I can go right into the journal entry. Do my show the debit here as a utility expense for $100, and credit our cash account for $100. Remember the 2 reasons we do either one of these. We do the journal entry so I can easily see and go back and see what happened in transaction number 4. It's easy to find, especially when there's a whole bunch of them. I can go right to it. If I want to know exactly what my cash balance is, that's what the T accounts are for. I can easily look, and if I can add these quickly in my head, so 30,000 minus 1,000, I've got 29,000 still in cash. Whereas if I just looked at the journal entry, it's not quite so easy to tell that right away. You're going to have to go through each one and kind of look to see which ones involve cash. Okay, number 6. After the first day, we rang up $500 in sales. And it was noted that, well, the cash drawer only had $400 because we're going to get paid here in the near future from Janie $100, but she hasn't paid me yet. So I actually have 2 things that the business got on this transaction. The first thing we got was cash. We actually got money. So that's going to be one of my debits. The other thing that the business got was a promise to be paid. I'm going to be receiving money very soon. So we got actually 2 assets on this one. The first one here is I got my cash, $400. The other thing that we mentioned that we got was $100 to be received to us from Janie. So I call that an account receivable. Now I know that I can't be done for a couple of reasons. One, I have 2 debits. I don't have a credit yet, so I know I can't be done. The second thing is I have $500 plus on the asset side, but nothing counteracting that anywhere else. I don't have a negative 500 somewhere on this side or another 500 plus on the right-hand side of the equation. But I also know I'm not done because I haven't answered the credit question, how or why did I get this $400? What did I do to benefit by getting $400? Well, hopefully you'll understand that I did it by actually doing my job. I've earned my first revenue. I completed the work and I got the money or a promise to be paid. Those 2 questions have to be answered. Remember back to my prior video. So $500 of assets went up and $500 of revenue went up. And remember, this plus sign is before the minus, and the minus only goes with the expenses. Now we can do the journal entry. Now this one, the journal entry is just a little different because I have 2 debits. The debits always go first. So I'm going to put my 2 debits. Notice how I put who the account receivable is actually to, so I can easily go back and see that. And then I put my credit here, why did I get the cash and why did I get a promise to be paid. The last thing I always want to do when I have more than just 2 items is I want to make sure my debits do equal my credits. And in this case, we can see that they do. All right, 2 more. Go back to the transactions. On number 7, the 7th transaction, it's actually this one here, Taylor paid $200 on her account to Miller. Remember, we owed Miller some money for a previous purchase that we got. It doesn't matter what I purchase now. What matters is that I paid some money. So I had to ask myself, what does the business get when I pay on a bill? And this one's a little bit tougher thing to think about because you didn't get anything physical. But what you did get is a reduction on your balance. So when I look at my T account, I did owe $1,200. But what did I get? Remember the debit side, I got a reduction, so a minus. I got a reduction on my bill. I no longer owe $1,200. I now owe $1,200 less this $200. So if I wanted to total up my T account, I could do that. I would have to draw a line, like you see here, this solid line, and then put my total down here, and then note it that I did total. I don't really want to do that right now. I'm going to do that at the very end. But for right now, if I needed to know it, I could easily do that. And then you ask the credit question, what did I have to do to get a reduction of my balance? I had to pay money. Cash, credit my cash. So cash went down on this side of the equation, and my liabilities went down on this side of the equation. So we balance. I can then do the journal entry as well. Debit the account payable to Miller because I owe them less money. Credit cash because I also have less money. Okay, the last one. Advertising is doing very well. So the owner, Taylor, decides to take advantage of a holiday special and get 2 months of future advertising for $1,300. Now, it'd be pretty easy to think, ooh, this one's advertising expense like we had before. But the key is I'm paying for advertising that has yet to happen. And it's not going to happen this year at all in 2016 or whatever current year we're in. This is future advertising for next year. I can't count it as an expense. I have to count it as I have the rights to that advertising. I have the rights to that item. And that's considered a prepaid, in this case, advertising expense. It's prepaid. I haven't had it yet. It's not over here because it's something that's going to come to me in the future. I have the rights to it. And then we ask, well, what did I have to do to get the rights to that advertising in the future? I had to write a check. I had to spend money for $1,300. Now this one with the assets, notice that both items happened on the same side of the equation. So my assets went up $1,300, but my assets also went back down $1,300. So they balanced themselves out on the same side of the equation. Nothing happened over here. It's just zero. Do the journal entry, debit my prepaid advertising, credit my cash. Now we have done all of the transactions. There are 2 final steps that you always have to do in accounting. You need to, and you do these on the T account sheet. I want to go into my T account sheet. I'll make this bigger now. The first thing I always want to do is I want to total any accounts that have more than one item in it. So like cash, I want to be able to look at my T account and know real quickly how much do I have. So I'm going to, and I either fold them, it's best to maybe draw a line, put a solid line here, some kind of a thick border. Let's see, how about this? So when I draw a solid line like this, that tells me that anything below it is going to be a total and not another transaction. I wouldn't want to think that this was a $27,900 transaction. No, what this is all of my assets added up minus all of my credits. So all of my debits over here, $30,400 minus all of these guys. And if you do that, you get the $27,900. And here on Excel, I just did it in a little formula. Anything that has just one number, you don't need to total it. There's no need. It's pretty obvious that Jamie owes me $100. So I go up to the liabilities. I owe Miller still $1,000. I got that solid black line there telling me it's a total. I can even put here that it is a total if I would like to do that. Sometimes that helps to make it even more clear. Total up my capital, and then really nothing else over here needs total. So that's the first thing you always do, total up your T accounts. The second thing that I'm going to be looking for that you always should do is make sure that your equation does really balance. And I'll want you to show me these 4 numbers kind of off to the side somewhere that they really do equal the assets. So I went through and I added up all of my assets. I took the $27,900, added in the $100 here, added the $1,300, $1,200, $6,000. When you add all those up, you get $36,500. Now for the other half of the equation, all I had over here was $1,000, so $1,000 plus the $36,000 plus the $500 minus, remember this was the minus everything that's added up over here, $1,000. Now I can kind of do this in my head. I'm not going to type it out. So we got $37,000 here, plus another $500, so $37,500. $37,500 minus $1,000 does in fact equal $36,500. So this equals $36,500, and this side equals $36,500. That now tells me that I have done everything correct, or at least I'm on a good start that I've done everything correct. I could have messed up something. For example, if I would have put this $6,000 over here in revenue, everything would have still balanced. This side would have still been a positive $36,500, but my actual accounts would have been off. So you can have the equation be perfect, and still not be have everything correct. Okay, when we come back, I'm going to be talking more about adjusting journal entries and taking this one step further. So thus far, we've done 2 steps in the accounting process. We've done the journal entries and we've done the T accounts. Next, we're going to look at adjusting entries and a trial balance as we head in to our second week in looking at adjusting entries. Again, if you've liked this and this was a benefit to you, please let me know either through the YouTube comments or through email. It helps me to know if these are worth making. I will see you next week when we look at adjusting entries.